COSM getting the retracement that we actually were talking about yesterday, although a little later in the day than we actually anticipated. So let's go ahead and validate or confirm or see the potentials, right, for the following sessions. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COSM technicals, raw price action, and statistical thread of analysis on this Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCa Bulls. With that said, let's dive right into the charts. So yes, guys, we were actually talking about yesterday the potential support area per this gap right over here formed on the 23rd, Friday, right, of March, and we actually failed that support and came back down to the secondary support that we were speaking of yesterday, except yesterday was $3.49. The mean actually, of course, upon the downside came down to about $3.47. We bounced right off it just like we said, okay, you guys? So it's looking pretty good. Let's go ahead and now take a look at why we would actually retrace to the mean, okay? But that could actually be in respects to the breakout out of the buy formation triangles that we're seeing here, right? So these triangles, we had one large descending triangle or right-angled triangle, and we had a smaller falling wedge. The falling wedge, I mean, both of these triangles are actually bullish, right? So go ahead and notice here that we actually still came back again to validate this newly converted resistance into support, actually two of them. Sorry, just had to get a closer look there. So yeah, we're sitting right at the support levels of the top triangle, meaning the smaller falling wedge. So we're still in that, okay? The dangerous thing here is that we did print now, or we actually converted this bullish engulfing here into a bearish engulfing. So there is still a potential for us to continue validating our newly converted resistance into support. And if we were to just kind of put a quick little support touch guess here, we could very well touch into that $3.40, $3.37 area. But please remember, the last time that we were within that zone, I think we actually got some pretty substantial bounces, okay? Notice right over here, okay? So huge touch to this, very big upside. We got another touch to this support zone, very big upside, okay? We used it as a resistance once, and then we actually used it just recently. We came back into this area here and bounced massively to the upside, and it looks like we're trying to maybe test that area once again, and just like we did yesterday, or I'm sorry, just like we did in the prior iterations, guys, there could be a pretty powerful bounce from that, okay? So now on the daily time frame, we can actually see a little bit of a silly formation that would essentially suggest or encourage a downside, but it would be for a pretty large upside following it, right? So yes, you guys know what I'm talking about. This is a little bit of an inverse herpy-derpy that we have right over here, right? So this is actually the shoulder. You have a head right over here, and this would be the second potential shoulder, right? So then this would actually suggest a continuation onto the upside. It also does have it does have a price objective too, okay? So remember, these don't always have the best hit rates, right? But we can actually see, let's see, I'll go ahead and try to just put it down here for us and see what we have. All right, so yeah, it could be something like this, the neckline, right? So let's go ahead and just take a trend line from the top side of that triangle all the way down to the lower end of the head from the inverse head and shoulders, right? And we can then put it to the top of the right shoulder, right? So now this target is actually suggesting a top side of about $5.05. Of course, it's going to take days because we are on the daily chart. But let's go ahead and move on to the next chart and see what we have. All right, so this is actually in respects to the 5-day volatility versus momentum backtest. We're still sitting within that same situation here, where we still have about almost 22 hours to close off this candle iteration so that we can see what potentially could have happened, right? So just like we talked on the last time, guys, this is that critical support area down here that we've used several times for huge upside bounces, right? So we're lingering within that area yet again. So something is brewing here for COSM, and definitely notice that we're still right down here an oversold percentile with a contraction starting, right, with a contraction phase. So if we're looking at, let me just see if we actually could pull up the ARC reversion variant to see if there's anything in line for us. Okay, so yeah, there is. Go ahead and notice that whenever we actually expand into critical volatility, which is within the 90 percentile, and start a contraction phase to the downside, that usually indicates a mean reversion, whether it be to the downside or to the upside. Remember, volatility is direction neutral. Okay, so now momentum, the stochastics oscillator itself will give us that bias. So now we're getting the faster time frame to start curving to the upside, which is indicating a potential mean reversion to the level of about $5.73. It sounds a little bit familiar. Yes, because $5.05 is actually the inverse herpy-derpy top side target, right? Another thing that is very familiar is because if you take a trend line from the top side of the triangle all the way to the downside of the triangle and you apply it to the area of breakout, it takes us to $5.74. Okay, so everything is rhyming very nicely. 573 on the 5. And remember, these are two different I'm talking about a whole algorithm here on a 5-day chart versus the discretionary targets based on geometrics, right? So this is it is suggesting some pretty nice things over here. Notice that the one spot 272 is at 555, just upside of the 574 target, right? So actually I need to correct this as the line is not entirely, there we go. Oh, okay, it's okay. It didn't actually make a difference at all, but it's all good. It's still right there for us to evaluate, guys. It is the 574 target. Everything is looking pretty good. So let's go ahead and continue validations here and see what we have. Okay, so this is the 8-hour volatility versus momentum backtest. Although we are sitting in the bullish control zone, I do have to express some warning here that the price action today did flash this a little bit to the downside. We still have the 3-day exponential moving average above the 14-day simple, which is okay, but sometimes when crossing that 14-day simple below the 3-day exponential moving average can lead to a potential continuation to the downside, which is very confluent with what we're talking about here, about coming back down to this target of about 337, I think. Yeah, 337 to about 340, okay, in regards to this very important demand zone from where we've exploded from before. Right, so yeah, that's essentially what the 8-hour time frame is suggesting. So that doesn't mean that the statistical play is done. It just means that it's it's following the natural ebb and flow of the market, something like this, right? And then it just, we have to do things like that, guys. It is price action, it's random. All right, you guys. So let's go ahead and now look at the, so this is the reversion that we were talking about. We got that bounce from the 8-hour. Nice. Now let's go ahead and look at the RSI and validate the potential downside. Okay, so go ahead and notice here that yes, we do have a downside suggestion from the 30-minute, the 4-hour, the 8-hour, and the 12-hour. Okay, but when we start jumping into the bi-daily, notice that we are at support from the bi-daily, and notice that the 5-day iteration is still upside of the 14-day simple moving average, which is the most important one. These downsides being suggested from from the 4-hour, the 8-hour, and the 12-hour are limited, and they are limited because we have the 14-day simple moving average right below us where we can use as support before a continuation onto the upside, thus validating the upside pivots from the 5-day time frame. Okay, so that means that we have a limited downside. The limited downside again looks to be in respects to this target right down here. Okay, you guys, we can actually wick down to that 337, 340 before a massive continuation to the upside. We will continue validating this. Okay, you guys, please remember to refer to the links in the description below if you would like to get enrolled in the ArcMasters trading course. Okay, you guys, there are still seats available. We're going to be reviewing live everything from the beginning, the very fundamentals of trading, all the way up to advanced topics and mathematical applications. Okay, so go ahead and get enrolled, get your seat now, and everything will be cool. And okay, you guys, so remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot, and I repeat, I cannot suggest for you to buy or sell any assets whatsoever. Okay, you guys, I need you to do your own due diligence and everything will be just fine. All right, but with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.